Hello, this is the TradeSite U.S. Stocks and Futures Market Preview for Tuesday, the 17th of March, 2020. Hope you had a good trading day on Monday. There wasn't a ton to be done. We obviously gapped down huge. We tried to come back a bit, rolled over, and slowly drifted back down, closed at or near the lows, depending on which index you're looking at, as the Dow threatens to break back under 20,000, down 3,000 points today alone. Well, let's go through it all. So here's the ES front month futures contract. It's the daily chart of the broad market in futures form, and I mean, we're well off the highs at this point in time. Let's look at the weekly chart just so you can get a little bit broader picture of where we're at here. We're basically we've undercut the lows from 2019, obviously by a lot. We actually undercut briefly the lows from 2018. We're under most of 2018. So we'll see. It doesn't take us much more to get back to the beginning of 2017, which was around 2265. As we pointed out in the room the other day, 2265 is where the ES was on inauguration day, January 2017. So that'll be a key number right there, obviously. In terms of the monthly chart, we've talked about this. This was our sell signal back in the end of October. We were talking about November, December. We were setting up against the risk line. January, we got the movement that wouldn't let us close above that risk line. So perfectly technical. Everybody says, oh, this is all about the virus. This, to an extent at least, was coming. As we said, as we pointed people towards, we had an inverted yield curve before this happened. And the 13 sell signal was back at Thanksgiving time or before it. So the market was set up for decline. Whether it would have happened this quickly or not is obviously the difference. And the red line down below is the static trend line, which is the target of a 13 sell signal, unless another condition happens, which we're nowhere near that condition. So that's 1980, just under 2,000 on the ES. So we're going to be watching that level. If you get down there, I think you could probably buy, load the boat a bit on some stuff, and especially the futures or some sort of index. If we can actually hit that level one day, maybe wash underneath it and then come back. All right, let's go through the major daily charts. Crude oil up $1.03 right now, but down at 29.79. That's up from the close. Gold up 7 points, and again a decline in gold as well. Everything's selling off. S&P cash index. So this is the real market here, not including today's new futures action since after the market closed. And this is down 324.89 on the session. Nasdaq 100 closed down 974.88, effectively closing at the lows of the day. SOX down 245.48. Biotech's down 316.71. So the biotech's now undercutting all of last year as well. The Russell 2000 down 172. Obviously, that's an ugly chart, generally speaking. The VIX up 24.86, gets up to over 80 for the close. We'll do a VIX comparison some other time, but remember, VIX doesn't really get much. It had one day over 90 ever, and that was back in 2008, and it was pretty much the low day or close to it. So, we'll see, but we may still have some decent downside in the market and one more day up on the VIX before we get to the final answer on all this stuff. The trend closes at 0.63. That puts the 10-day at 1.04. The trend has not really, until these last few days, had any, like that moving average hasn't gone under 1 really in a while, which is interesting. Nasdaq volume was 4.6 billion shares, essentially 4.5 and change. So it's been holding up, obviously. Advanced decline ratio in the Nasdaq negative 27.54. Way more stocks down than up, obviously. On the New York negative 26.82. Google loses 141.27. Apple loses 35.76. Netflix loses 37.46. Netflix is the one thing people are going to be able to do the next 2 weeks. Amazon down 95.85. Tesla loses 101.55. And look at this. We talk about the red static trend lines on these things. Tesla had that 13 sell signal just like the market did. This was on the daily chart back in February, and the target of that is this red line down here, and we came all the way back and hit it today. This is quite remarkable. Facebook down 24.27. Goldman Sachs down 22.51. TLT, the 20-year bond ETF, was up 9.97. It's curling back up after spiking and coming back a bit. And of course, we don't usually care about the Dow, but Dow down 3,000 points, just under it, approaching that 20,000 level again. So down a third basically a third of the Dow lost in the last couple of weeks. In terms of intraday action, and this isn't largely tradable. We're trying to keep people out of trouble more than anything until, we had our easy money when the breakdown started because we were looking for it anyways, regardless of the virus. But our job isn't to catch falling safes. Our job isn't to put you at risk more than we need to. We want to make sure we have good, solid setups. And obviously, with the market gapping these huge gaps and stuff, it ruins the opening range plays because we're halted at the open. It doesn't really give us pressure threshold plays because the gaps are too big. So we're just trying to be cautious. We'll call a few little things as we see it. Nothing in the report. And then once this settles down, we'll get back to work a little bit more normal and try to have bigger, broader plays. The Nasdaq side pretty much the same. In terms of economic data coming out on Tuesday, we've got retail sales now before the bell, capacity utilization and industrial production at 9:15, 15 minutes before the market. Business inventories, JOLTS job openings, NAHB housing market index 30 minutes into the market. And that's it. So good luck. Right now, the futures are showing a gap up in the morning, but of course that means very little. Could go either way. And there's no point in trying to guess. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great Trading Tuesday.